What's up, guys? We have the 9th and the 10th, 450 and 550. Puts the count up to 1,600. This was the trade that I caught earlier today. Shorted down here and took profit right here. I only had one contract, so I couldn't scale out. But pretty fire. We had the 200, the white line, and the blue is VWAP. Here, we'll put this right here, blue VWAP. White is the 50. 50 EMA. So that is that. We are having a retest of that at the moment. Put this bad boy over here. But we need I might not trade. If I do, it's going to be light. I'm going to risk about $139. We are halfway to the target. We have a nice curve, nice and slow. Statistics are 85%. Profit factor is 4.606.
Yeah, we have a number of things to unpack. Standing out the most, GDP print from Japan.
There's that.
Upward revision, even though it is lower than consensus. One investor focusing on is how the Japanese economy avoided a recession, a technical one, and that's building the case for the
Make sure put that there. Yep. Alright, let's do a little bit of top down. Let's see what we're looking at. We are still bullish right here about these 371 area. We might get a little retracement. We are at gold's all-time highs, so we're definitely in this consolidation. We finally broke out to the upside, took these Friday highs out in continuation, so not too bad. The hourly, we are starting to curl on the hourly. We had this nice rejection right here. I'm pretty sure that was news Tuesday. But yeah, we fell. We have, like I said, we have the 200 right here. We're below, or the 50. We're below it. And we are below the 1 hour VWAP. Hopping down to the 15. We have this nice leg down. We're starting to get this retest. I'm trying to see this retest of the 679 area right here. As we see when we hit it, we just try to pop a little past it. I do like to see that. I want to see this continuation like this. This is the kind of play I need right here. That'd be pretty fire. 15. 15's kind of looking a little consolidated.
In terms of how the government is going to achieve these targets, we know that basically the indications that the government is going to increase spending.
We did have a pop through, came back immediately, retested it. Now we're kind of still inside of it. Really not breaking one way or the other. The 5 minute, like I said, this is the play that I caught. I caught this leg down through right here, taking out these lows. We had this consolidation right here on the 5 minute, so it wasn't looking going to get a retracement back down. We're back up to my entry. Took a $500. As we see, we mark it out like this. We are falling into trend, so
as well as, I mean, it's this sort of increase for investors' concern of lack of transparency.
3. This is where like I said, where I entered. We had this cross of the EMAs, the EMA slash VWAP crossover. So we had this little crossover. I won't say that, but we had this cross, and then we had this retest, beautiful entry, and then we started selling off right here. When we started seeing this price push back up, that's when I started to get out of my contract. That was from 80s to 74s, so about $6 move. Pretty nice move. We are starting to find support. Right here, this is where it crossed over last time. So, yep. That's where it crossed last time before we had this rally up. So I kind of want to be patient. That is the kind of price that I want to see with this amazing leg up.
When I hear the US president talking about red lines, it makes me think of red lines that were previously outlined or at least
There's the one nice. This was, like I said, we had this consolidation. Then we had this crossover. We had this fake out and then rip down. Took out these lows right here. Then we had this retest of the crossover, and then we fell. It was a beautiful play. We can check out NQ. I'm not going to trade it, but it's it's headed nicely up. We did have a nice sell-off yesterday during the day. At open 6 o'clock. We haven't been up very far. We're not up that far. We were up about 150. I mean, that's pretty decent. Pretty decent. But no, don't trade it.
Traders are on alert, of course, for hotter than expected US inflation, and the data is expected, of course, to be published tomorrow. For a preview on the numbers, let's bring in Fleming Gildesis with the details. January CPI was a
Now, if I do enter this, I'm going to look at the retest of the 674. Around this area right here.
I think that the data for February.
My stop loss will be this. I want it closer to VWAP because price does like to break it and then come back and try to see and retest it. We already did get the retest, but we are pretty far away from it at the moment. We are about $62 away. So definitely going to wait for that to cook up a little bit. This is as you see right here, this is the EMA, this is VWAP. If price comes in this area, this is a do not trade. Price needs to be above or below it. It's all right. We have this chop breakthrough, the EMA VWAP crossover, and then we have this explosion. The one I just showed you, this was that beautiful. So here's the rules. We gotta have a 1 hour trend matches the 5 minute. So 1 hour.
With an excellent preview. Thank you very much indeed. One of the key data prints, of course.
1 hour, we are sideways. So don't make money if really make money if it goes up or down. But as we see, the rules say we have to have one or the other. We have 5 minute trend needs to match. So this was a bullish trend. We had a retracement, a bullish. So yesterday, this was yesterday's play. We had this, but now gold is starting to chop sideways. So it's not looking too lovely going up or down. So but we had this bullish move, we had this retracement, we had this another bullish move. Now we are starting to go down, but it could be another for a leg up as well to these highs. We just have to wait, be a little bit more patient. Gold don't really get volatile for a little bit.
And there's a number, of course, of key stories unfolding on that page right now. Japan firmly in focus. Will we see an equities round, at least in the section today, with stronger yen in focus?
Session.
Speculation that maybe next week the BOJ will end its negative rates policy. The growth coming out slightly stronger than expected in Japan. So that is in focus. Biden, of course, is warning around a red line for Israel. And then an election and a vote in Portugal with the centre-right coalition winning the polls in Portugal. All of those subjects. Coming up, the world's biggest crude exporter raises dividends, and that's despite a drop in oil prices. We take a look at what Saudi Aramco's big payout means. Who's next?
Let's see if I can figure out what the session was.
In your era, Transforming industries, changing the way we do business. Can with AI. Can KPMG.
We got this. We got on 3.
Hey, sorry to call again. I think we're ready for faster internet. You can do that, phone?
We got this 3 or
Well, I haven't.
we'll say
Come on.
250.
Small business owner, the time. Welcome back to Bloomberg the Daybreak.
250 or 245.
81.74 on WTI, looking $77 barrel, down 0.5% so far in the session. We're going to get some updates from the IEA and OPEC as well later this week, which may give some sense and some clarity in terms of demand supply dynamics that are playing through, of course, for this crucial commodity. But the top story of the day right now, when it comes to oil, is what's happening in Saudi Aramco, because that company has hiked its quarterly dividend to $31 billion. $31 billion despite a fall in energy prices and lower production. The world's biggest crude oil exports provides, of course, much of the Saudi government's income, with the payout becoming ever more vital as the country looks to diversify the economy from oil. Let's get the details then from
make this session a little bigger forward.
Anthony, so income coming in lower last year, down what, 20%, 25%, and yet the dividends being hiked. What's going on?
Yeah, well, this is a trend that we saw through a lot of the big oil companies.
230.
The net income is dropping.
3. There we go. We need to make it longer. 10.
Those big results the year before, and last year they're coming down, but still
11.
Strong numbers. And a lot of the companies are returning money to the shareholders either
11:30 noon.
Some big oil. Saudi Aramco is combining some of that 2022 windfall with the 2023 earnings, and they've put together this special dividend. So that's helping boost that payout, which goes mainly to the Saudi state. They've also increased
the
base dividend.
So as we see that we aren't even in my session yet.
Give some kind of focus to the shareholders that they know there's a downside there. That's the message from the company, and they're going to continue to share the upside. So they're really trying to make that a more attractive process.
Sitting, we got 3 to noon.
Also shoveling that money back to the Saudi state account.
What does it mean then? There's been reporting they're looking to revive a follow-on offering potentially later this year. What is the appetite likely to be for that following offering if it comes to pass?
Yeah, so we still got a few hours, so I'm gonna fix this all up.
Interest and a lot of traction internationally that they wanted. So there was a lot of local and regional interest in that initial IPO of Saudi Aramco. They are potentially.
I did like to see this
later this year. So
rejection right here. That was pretty fire. We didn't have this aggressive start of the day.
That does control. We're seeing that dividend as the Saudi state needs the money. We're seeing that other decision in January where the Saudi state decided that Aramco shouldn't go ahead and increase its maximum spare capacity. So a lot of these directives are coming from the government, and that is a concern for the shareholders. The shareholders won't have much voice in the company because it remains majority, almost completely state-owned. So they're really there for the dividend, but the idea here is that they want to give some prospect of growth to the shareholders to try to attract some more investors into the company. So
yeah, we had that restart.
What are the updates? There have been reports around Saudi Aramco's potential investments in US LNG. Any updates on that front? What are their ambitions in terms of US LNG?
Yeah, that's an area that they're really interested in with the shale developments there.
There we go.
Gas coming out of
Here's the restart of the day.
US Gulf. It's going to be one of the main contenders for LNG production over.
We are kind of getting a retest of it.
US, Qatar, Australia.
Session.
Exporters. So there's a lot of growth there. Saudi Aramco wants to get on that. They want to be involved in a market that they're allowed to trade, that they're able to trade with those cargoes, able to go anywhere. The domestic gas in Saudi Arabia is going to mainly stay domestically. They want to use that gas for power in the kingdom.
We did have this
some of the
nice
other gas
breakaway,
stations as,
retest,
a way to
consolidation,
the hydrogen, blue hydrogen, and
rally up
export that.
till my
The
time.
focus on international LNG is really a trading play. Trying to get in there. Those
This is
assets
why it's
and get them
bullish.
so they can, buy and sell
Nice
globally. So they really want to move
leg
that.
up.
Is one of those main areas where they are interested.
Okay, really interesting. One certainly to watch in terms of how that evolves. Top line, Anthony, what is the picture looking like for Saudi Arabia's economy as it continues this diversification efforts, and what are the budget constraints at this point?
Yeah, I mean, as you say, it is an effort to the diversification so far because they really need to take these oil earners, which is clearly the main earner from the Saudi government. They need to take those and put those into industries and develop new industries that are going to be able to
Then we
support
had
the country
what is that?
economically and
Yeah,
create jobs going
6.
forward as the world shifts away from oil.
Bam.
For Saudi Aramco's got a very long view on oil use. They want to continue selling oil.
That was open.
Selling oil that can be turned into chemicals to make plastics and things that will need electric cars and batteries, etc. And they want to continue selling that gas.
Retest of
They've got a
it.
long view on the energy industry. They expect to be in this business for another several decades. But what they really need to start doing is taking those oil earnings and then putting them into those industries in the kingdom. They are having some issues bringing in the kind of foreign direct investment that they do need to step up that as well in order to get those big projects really rolling and get those industries developed.
Okay, Bloomberg's Anthony Di Paola, thank you very much indeed for the lens on Saudi Arabia on the back of Saudi Aramco's ramped up dividend, of course. What that could mean more broadly for
Day,
the
week,
economy of
month.
Saudi. Plenty more coming up. Stay with us. This is
What's happening?
Welcome back to Bloomberg Daybreak Europe. Now to some of the other stories we are following today. The US Justice Department has opened a criminal investigation into the January mid-air blowout of a Boeing 737 MAX fuselage panel on an Alaska Airlines flight. The airline says this is standard practice for the DOJ and that it doesn't believe it is the target of the inquiry. Bloomberg has learned that Reddit and its investors are looking to raise as much as $748 million in the company's IPO. Sources say the social media platform plans to sell shares in a range of $31 to $34 each, seeking a valuation of as much as $6.5 billion. Reddit has been working towards a listing since its initial filing in 2021. And Oppenheimer has picked up a total of 7 Academy Awards, including Best Picture and Best Director for Christopher Nolan. Barbie's 8 nominations amounted to just 1 trophy for the best song in a night that saw Hollywood's old guard return to glory amid disappointment for streaming companies. Disney's All Things won 4 awards, including Best Actress for Emma Stone, beating Lily Gladstone, who was in line to become
Definitely
the
above
first
it.
American to win an Oscar for her role in Apple's Killers of the Flower Moon. Coming up, investors will look ahead to US inflation data tomorrow after, of course, Friday's mixed jobs reports. Our markets wrap is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The yen in focus as Japanese stocks slipped the most in months on growing speculation the Bank of Japan will raise rates. Investors look ahead to US inflation data tomorrow. US President Joe Biden warns Israel against invading the city of Rafah, calling it a, quote, red line as ceasefire talks remain deadlocked. Plus, Aramco's $31 billion gift, the world's biggest oil exporter, ramps up its quarterly dividend. That's despite lower oil prices, and it's to help the government plug its budgets deficit. Let's check in on these markets. A bit of risk off across the equities market, but the context that, of course, US stocks have rallied, the last 16 and the last 19 weeks. That run, the strongest and longest run of gains we've seen since the 1960s in the US. That's with the S&P. Currently looking at European stocks futures down 0.5% in the session. 5100 futures pointing lower by 26 points. Here in the UK, we have wage data, of course, out tomorrow. It's going to be very consequential in terms of how you think about the Bank of England. S&P futures currently back above below 5,200, 5,186, just pointing lower by about 0.1% after the losses on Friday. Nasdaq futures currently down 0.2% after dropping a little over 1.5% by the end of the Friday session. Currently trading at 18,262. And of course, it is inflation data in the US. It's going to be really consequential in terms of where the thinking on the Fed lands. Let's flip the board and look across asset then, with the view then on CPI. The expectations, the core CPI out tomorrow out in the US will come in year on year about 3.7% for the month of February. The US 10-year currently at 4.06. Again, as we said in the headlines, in focus for us today, the strength coming through for the currency, carrying just 146. Not a lot of movement so far, but of course it has rallied in the last few weeks on expectations the BOJ will end its negative rate regime at that meeting next week. $81 a barrel on Brent. We're looking ahead to reports out of OPEC and the IEA later this week. Currently down 0.4%. And iron ore taking a big hit. That really is the commodity of the moment on the softness again. The concern that not enough policy has come through in terms of the NPC, the National People's Congress in China, to support the real estate market. 108 and iron ore currently down close to 6%. Let's get to US CPI then for the preview. The latest data is out tomorrow. Traders then on alert after last month's surprise inflation print coming in higher than expected. Let's bring in Bloomberg's MLife, Mark Cranfield, of course, who's been thinking about all of this in great detail. Mark, which assets are likely to be most affected by the US inflation print tomorrow?
Well, inflation means it's a big week for US Treasuries, so that means it's a big week for all asset classes, really. But certainly, how the response goes in the US rates market really means a lot for everybody. So all eyes will be on whether or not Treasury traders think that the outcome of the CPI is enough to convince the Fed to lower interest rates in June, or whether we all have to take a step back and move a little bit further out in the year. So really, that's what it comes down to. Is increasingly what we've been hearing from Federal Reserve people is that they want to delay a rate cut until the second half of the year. June looks like the hypothesis at the moment, but we really need a couple of CPI numbers to confirm that is the case, because clearly some of the data have been way too strong from the Fed's point of view. It's given them a reason to be less optimistic about the outlook from that point of view. So certainly there are some people thinking the CPI number will be another hot one today. There's nothing really in the track record to suggest it has to be that the case. It's really an open question. But certainly the Treasury yield in the 10-year close to the 4% area, it really is a very big number. If we go on to a 3 handle, people will get very excited that the rate cut is coming in the near future.
Okay, Jay Powell, of course, last week saying not far from that point where they cut rates. We'll get maybe the CPI print, of course, gives us back to what not far means for Jay Powell. Meanwhile, Japanese stocks look up still year to date, 16% or so. They're taking a thumping today, Mark. The narrative had been from strategists we've spoken to, it's not just about the yen softness that we've seen prior to the last few weeks, but it's also around corporate governance. I wonder if that corporate governance story is kind of being derailed by the price action today. What is behind the move lower in Japanese stocks?
I think it's been exaggerated because of the time of year, really. So we've had a torrent of media stories, which really now is ramping up the pressure on the markets to think that the Bank of Japan may actually move in March, which really was a bit of a long shot. Even just a couple of weeks ago, people assumed it wouldn't be before April, possibly even July. We've had almost daily reports telling us that the Bank of Japan are getting close. They're even talking about taking away yield curve control. All of this is suddenly coming together, and we've still got a few days to go until they meet for the March meeting. So suddenly, even the equity market has got a bit nervous, and the fiscal year end is coming up at the end of March as well. So if you're traders, investors, sitting on very good gains, which they have been for the Japanese market this year already, and you're coming up towards the end of your financial year, probably you're saying to yourself, well, there's not much upside for me. I want to go to the sidelines for these profits, because the Bank of Japan may just do a curveball and they may all in one go in March rather than string it out over a series of meetings. So that's really where we are. People looking at the situation saying it's better to book something now rather than wait to see what the Bank of Japan has to do.
Mark, a top story for us today around and beyond Japan is this short trade around volatility booming in the ETF complex. What do you read into this story?
Introducing Blueprint AI, built by designers.
We are one of the top-rated heating and air conditioning companies in the area. And as we get towards the end of the summer, we have a special going on where we can get you a brand new heating and air conditioning system. So you're going to be covered in the summer and you're going to be covered in the winter for $0 down and starting at just $83 a month. If you're interested, if you'd like more info, scan the QR code here to my right or to my left. It's going to take you to a page with a few quick questions. Answer those. We will text you for more information. And if you live anywhere here in the area, maybe you've got an old air conditioning system that's just been giving you trouble for a while, or maybe you need a new system right away, we can get you a new air conditioning and heating system for $0 down and starting with just $83 a month. If you're interested, scan the QR code here to my right or to my left. Answer those questions and we'll text you over more information.
Hello, I'm a child and I'm in prison.
Why are you scamming me?
Saving for a trip to Vegas.
Just use Kayak. They search hundreds of sites to find great deals. You don't have to be a bad person.
Okay, Mommy.
Kayak.
Well, it's not unusual when financial markets, especially in the United States, when equities have had a relatively clear trend and people are confident that it's going to go on. AI has been driving a very good rally, as you were saying earlier, 16 out of 19 weeks markets moving. That makes people confident to sell volatility. It means that they will try to enhance their returns because they think the market is in a fairly clear direction, particularly for the downside. They're willing to sell put options to earn the extra income because they don't see the market reversing quickly to the downside. Of course, the more people that join that, as this story says, you get a lot of people joining the same trend. Too much money is involved. All you need is a little bit of disconnect now between what policymakers say or an unexpected event in the market, and suddenly it can all turn into a big mess. And this so-called Armageddon events take place. Last one was about 5 years ago. So certainly it could be triggered at any time, but certainly the amounts of money involved now make it more likely to happen in the next few months rather than the next couple of years, simply because the number of people that would need to change direction is so big. So all it's a bit of a herd instinct. So if something triggers it, for example, if the Federal Reserve looks at the inflation numbers this week and say there's no way we're cutting rates this year, that could well put equity markets into a spin, and we may get a big event off the back of it.
Okay, Mark Ansfield from Bloomberg MLive on those potential Armageddon risks with a preview, of course, of US CPI and what is reacting and what is leading to the downside coming through for the Japanese equity story in the session today. Mark, thank you very much indeed, as ever. Now, to some of the other top stories we are following. Portugal's centre-right AD coalition has won elections held this weekend in a tight race, which also saw support for the far-right surge. With almost all votes counted, the AD secured 79 seats, 2 more than the Socialists. Far-right party Chega, which was only founded in 2019, recorded the biggest jump, quadrupling its representation. Now, Germany is bracing for further travel chaos after unions representing train drivers and airline staff announced further walkouts. A 6th strike by train drivers coincides with a 2-day strike by Lufthansa's cabin crew after ground crews stopped working last week. More delays and cancellations are expected as passengers get caught up in the latest escalation of wage disputes in Europe's largest economy. And staying with Germany, Bloomberg has learned that the Netherlands is closing in on a deal to sell the TenneT power grid to the government in Berlin. The possible acquisition comes as Germany seeks to bolster its energy security amid uncertainty, of course, triggered by the loss of Russian pipeline gas. Details of the transaction, worth some 22 billion euros, could be announced in the coming days. And India has signed a free trade pact with 4 European countries that the Modi government says will create 1 million jobs in 15 years. The deal with non-EU countries, including Switzerland and Norway, has been 16 years in the making. India gets private sector investment commitments in return for the Europeans securing easy access to Indian markets and products. Now, ARK Investments' flagship innovation ETF had not held any NVIDIA shares for about a year. We asked CEO Kathy Wood whether she regrets that decision and what might change her mind about the stock.
We wrote it most of the way up, and I'll tell you what we did. And this is, as a portfolio manager, it's not one action, but what it causes in terms of another action. Last year, we sold in the flagship NVIDIA and put it in Coinbase. Coinbase, I believe, is up at least as much as NVIDIA, and it is much less well understood. The whole crypto movement, the crypto asset movement, Bitcoin as a new asset class and so forth, is not well understood or completely accepted out there. So we prefer to go where others are not traveling as much. And, you know, as we were looking out of NVIDIA, we were saying, okay, regulators are trying to crush Coinbase here, and we were buying it on every dip. NVIDIA happened to be one of the sources for that purchase. So it's not just what we do on the sell side; it is what we do on the buy side that you have to look at. And yes, we do hold it in the more specialized funds, but we've been taking profits there as well for reasons I just described.
Yeah, and to be fair, you're right. Coinbase is up about 620% since the end of 2022, so that compares with about 530% gain in NVIDIA. Is there anything, though, Kathy, in the NVIDIA story that would make you rethink the name and want to become more aggressive on it?
Yeah, if the price came down a lot, we would. You know, the rate of return expectations
Or
we
split?
have.
My stop loss would be right here, though.
No, that wouldn't change. That wouldn't change anything. No, split adjusted then the price. So, you know, if you look at our portfolios, what we're trying to capitalize on with a Palantir, for example, are the next stages of this AI revolution. What we're seeing in the GPU side of things is NVIDIA, all praise to Jensen Huang. I mean, just unbelievable company execution, vision, and so forth. And it's not over. It's
Maybe get another retest right here. I'll push this down a little closer.
From AI, the productivity lift alone is going to be massive, the most massive productivity lift in history, we believe. And so this AI revolution is going to be broad-based and is going to benefit a lot of companies. On the GPU side, of course, we have AMD as competition, but many people do not understand that there's a lot of other surreptitious competition evolving out there. Each of the hyperscalers is evolving its own chip strategy. You have a Tesla that has designed its own chip for an AI chip for the more specialized autonomous driving opportunity. And I think you're going to see a lot of companies developing more specialized chips. We know that NVIDIA, of course, will segment the market as well. So we just think that a lot of the assumptions for NVIDIA, you know, that this is NVIDIA's market and it's alone, but those are changing.
Okay,
We're going to go in light.
Speaking to Bloomberg's Carol Massa, talking of the likes of NVIDIA, let's check in on the Magnificent Seven, because something has happened year to date that is starting to evolve and really raises questions of whether or not we should ditch the Magnificent Seven and make it the Magnificent Five, or indeed the Magnificent Four, because here's the split, here's the division then. You're seeing the gains coming through from the likes of NVIDIA. Just year to date, that stock is up about 80%. Tesla, which is normally part of this magnificent story, has slipped, meanwhile, year to date by about 30%, down 30% year to date, close to that for Tesla. Concerns, of course, around the demand for electric vehicles, concern about competition coming through from EVs out of China, concerns around the consumer starting to be worried about the push around EVs and whether or not, in fact, they want an ICE engine to get that duration and that drive. Apple, meanwhile, year to date down around 12%. Again, the China story is a drag for Apple as well. Expectations around a new driver revenue for Apple, that hasn't quite come to pass. So whether or not you carve out Apple and Tesla, because right now there is this division that's come through, is that a story that sustains itself, or is there a turnaround in the narrative when it comes to Apple and China, or indeed Tesla and the demand out of EVs? Because for now there is a split, and there's a really relevant question as to whether or not you have to rebrand the Mag 7. Just something to flag for you as we think about the upside that's come through for the likes of NVIDIA. Meanwhile, there has been a concern as well, so we flip the ball around the concentration of the gains that have come through for the S&P within the Mag 7. But in fact, the S&P 500 on an equal weight basis, so that's when all the constituents are given the same weighting, whatever their market cap, whatever the company size, all the constituents are given the same weighting. In that case, the equal weight
I need
S&P
to push through,
is
see this.
2022 peak, suggesting that there is this broadening. Again, we should assuage some of those concerns around the concentration risks. Coming up, China's NBC is wrapping up. We're going to take a look at why there's been more of a focus on what leaders did not do and what this means for the world's second biggest economy. We're going to bring you insights from one of the smartest people on China and that economy. Stay with us. This is Rupert. Welcome back. Now, China's annual session of Parliament, the National People's Congress, wraps up in Beijing in less than an hour. In about half an hour's time, in fact, with perhaps more emphasis on what leaders did not do than what they actually did. Joining me now is Michael
Come on, let me see it fall
at
through.
Carnegie Endowment for International Peace, and someone who has followed the story of China's economy for years in granular detail. A few people have the kind of insights that Michael Pettis has. Michael, thanks for joining us this morning. One line that stood out to me from your notes to us: consumption. The only potential engine of growth for 2024 for China is consumption. Just unpack that line for us.
Well, for a large economy, there are only two sources of growth: investment and consumption. The trade surplus doesn't really matter. And if you go through the various components of investment, there are three big areas. There's the property sector, which at best will stabilize and probably contract this year. There's infrastructure investment, but there's increasing evidence that Beijing is very concerned about the sort of non-productive direction of infrastructure spending. So we're already starting to see some constraints this year. And then finally, there's a big shift to manufacturing. But as you know, an expansion in China's share of global manufacturing, which is what this requires also that the rest of the world accommodate it. And it's pretty clear that the rest of the world does not want to accommodate an expansion in Chinese manufacturing. So we're left with consumption.
And they've been reluctant up until this point, Michael, as you pointed out.
I do not like to see that.
Handouts to households, but you think that maybe changes towards the end of this year?
Fuck.
Yeah, because when you think about how we can get consumption to typically two ways, right? One way is we hope for a revival in that sets off that revival in consumption. Could happen, but there's no particular reason to expect it to happen.
Because we had white,
white,
blue, push out,
fiscal
retails.
stimulus directed to the household sector. Now, China has said that it won't do that. This is what the U.S. and Europe did, for example, during the COVID period. They said they won't do that, but I don't really see any alternative. If the other things don't work and that's all you have left, then basically that's probably what you're going to have to do.
There's a line that they're going to shift. What the policy focus is on shifting
I don't like that.
infrastructure
Big
investment,
look through
property
that.
investment to high-end manufacturing investment. What is the constraint to that policy?
This leg,
Well, China is about 18% of global GDP. Chinese consumption is about 13% of global consumption. Manufacturing is an astonishing 31% of global manufacturing. So that's really the problem. When China was a much smaller share of the world, it could expand manufacturing without putting too much pressure on
I think I'm done.
But it already accounts for nearly 1/3 of global manufacturing. So any expansion driven by an increase in the manufacturing share of GDP must be accommodated by a reduction in manufacturing in the rest of the world. And if you look at what they're saying in the US, in India, Japan, Europe, it's not really clear where that that contraction is going to come from?
On the property sector, Michael, we talked to Standard Chartered CEO, HSBC CEO earlier this year. They say they do see a bottom starting to come through for the property sector. Do you see a turnaround in that sector this year?
Not yet. You know, property.
I mean, this is the trade ideal that I had that I was trying to look at, but my stop loss would have to be above this high right here. This is above that 5 minute. I could actually bring it down here.
But so far, it's been contracting pretty rapidly. At best, you can get a slowdown in the contraction.
And as we look ahead, and we
3
have to think
minute.
about politics always now when we think about the Chinese economy, we look ahead to the election in the US in November. Does either Biden or Trump, or whoever comes to power after that election, change the dynamic for China's economy?
Yeah,
That's a really
that's a stop
important
out.
question, Tom, and I think a lot of people assume that it is going to change because when we think about Biden's policies, they're focused towards
Because I technically wanted up
industrial
here.
policy, whereas the people around Trump have been talking more about trade policy. But I think the important point to make here is that from an economic point of view, there's no meaningful difference between trade policy and industrial policy. In both cases, they represent policies that are going to shift income from the household sector to the manufacturing sector in an attempt to grow the manufacturing share of the U.S. economy. So no matter who becomes president, I'm pretty sure we're going to continue moving in that direction.
Okay, really, really valuable insights as the National People's Congress wraps up in Beijing. Michael Pettis, Senior Fellow at Carnegie Endowment for International Peace. Really appreciate your time and your insights this Monday. There is plenty more coming up. Stay with us. This is Replay. Welcome back to Bloomberg Daybreak. Yes, we're going to look at the CPI in the US on Tuesday, but for now, the speculation around the Bank of Japan is almost at fever pitch. On the back of the news, they avoided a recession. The most recent quarter wage data, of course, remains relatively resilient as a pickup. You're seeing the wages out of Japan, so expectations building that they could then go next week in terms of moving out of negative rates. You've seen the straight come through for the Japanese yen, 146. As it cuts cross through 145, where is that level? They're going to be support in terms of USD, JPY. But from the moment, the strength of the yen, the uptick in yields, pressure in Japanese equities, they fell. The last time I checked, the Nikkei was down around 2%, over 2%, one of the biggest drops in about a year. So we continue to focus on the BOJ story and the speculation that maybe they will finally move out of negative rates. Stay with us. Coming up later, Eurogroup President Patel Ndono is going to be speaking to Bloomberg exclusively later in the show. Stay with us. This is Bloomberg.
Nationwide is more than we think.
Oh, yeah. Their estate planning resources help keep me updated on the latest rules and client opportunities.
Speaking of, I need to leave my quarters in collection or something. It's complicated and massive.
Tasteful, though.
Yeah.
The writing isn't on the wall anymore. It's everywhere. So Barclays Investment Bank provides critical market insights to help you see through the noise. Barclays, powering the possible.
There's a huge
I mean,
difference
it hit
between what's
1-1
going on
for a
Main
minute.
Street and what's happening on Wall Street.
The general health of the economy. It's broken down. We're expecting a prolonged period of elevated inflation.
We have an eye on the inflation data, but the data point is not going to, I think, derail the path.
I don't think inflation is getting away from the Fed, which is why I think they should be focusing more on the growth side of the economy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Ordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Wednesday at all-time highs as Secretary Bessent is pushing for the Federal Reserve to recalibrate. The White House Fed pick Steve McMahon is facing a key vote on Capitol Hill, and a judge is blocking the president's effort to remove Fed Governor Lisa Kerr. That meeting just 1 week away.
Next week's not going to be boring. I think that we can say that fairly. That the Fed meeting on September 17th is going to be
Yeah, he's Wicks or
We'll be there. Will she vote? That's going to be
For one, there's not no
Meanwhile, Stephen Byron also
candles like
will be there,
this.
given that he probably will get ushered
They're
through
getting bought
Congress.
up.
So how much are we going to hear about this? How much are we going to get to send across the board? Do we get some
See?
bigger numbers put out there? And how much does that affect market pricing of just what this Fed has in store?
The Treasury Secretary's been pretty clear. He wants to see his quote.
If I am able to close underneath it, then
Well, he's basically said this,
Yeah,
Jonathan,
be
just a
pretty
few
fire.
weeks ago, saying, given the revisions, and he wanted to wait to see what the latest report was going to say, and after the latest downward revision of basically BLS overstating the jobs, almost nearly 1 million jobs in the United States of America, Treasury Secretary easing towards kind of urging the Fed to cut by 50 basis points. That potentially could be on the table. Definitely already 25 basis points the market has baked in.
He's asking the right question. If we knew at the time that payrolls were 75k less every single month over that year, where would rates be this morning? Isn't that a question the Fed's got to ask themselves in this meeting?
And it's the reason why they cut by 50 basis points last year around the same time. So by the same logic, could we make the same assumption now that actually we may have seen a couple of negative payroll spreads if you take the adjustment into all of the models and take a look at June and July and August, you start wondering, okay, is the labor market at the behest of Fed policy? And is there something else driving earnings and driving corporate success other than what's hinged to the labor market? This divide I have to keep coming back to, and can Fed rate cuts really support a labor market that has a lot of very idiosyncratic aspects to it?
You say you're data dependent, but in real time the data isn't that dependable, and that's a big problem. Later on this morning, more data. PPI, 8:30 Eastern Time tomorrow morning. CPI this morning, equity futures just about positive on the S&P 500. We've got a busy 60 minutes coming up. In the chair of Academy Securities, as President Donald Trump floats new tariffs to pressure Russia. We'll catch up with Terry Hayes of Pangea as a federal judge blocks the president from firing Fed Governor Lisa Kerr. A great echo of EY on a massive labor market markdown. We begin this hour with our top story. Escalation risk in Europe. Poland striking down Russia.
So
Ollie, what do we know?
80, that's 160. There's one contract down.
Or an accident.
This is a very tight stop loss. I mean, most people do like 250 for one. I'm doing like most people would have it up at like 300. That would probably be 16 ticks.
Among Europeans and really globally about whether that sort of event is the kind of thing that triggers Article 5. The reason
And we also have
this is the first time a NATO country has
Valor
shut
coming
down
up.
anything from Russia over its own skies since the beginning of the war, and it has caused the Prime Minister Donald Tusk to invoke Article 4. To
This is a paper trade, so I'm not really too worried about it, but I wanted to take it on my account, but we're gonna say my account's pretty good today.
We should say it's significant because it's only ever happened 7 times before since 1949.
And we are going to be getting taken out of this trade.
How big a deal to make of this?
We are a sneeze away.
To encourage to test the distance of NATO, or is it just indifference from Vladimir Putin, basically not shaken by the possible threat of Article 5? Either way, it sends the same signal to the Europeans, and in fact to Donald Trump, who's trying to bring Putin to the negotiating table, that Putin is not really terribly afraid of NATO, and that he's feeling emboldened and not really moving his way towards a ceasefire conversation.
So, Ollie, this is how the president wants to address things. He wants the Europeans to go hard and go after Russia.
We are a sneeze away.
India and China. He wants the Europeans to ramp up tariffs, and he's essentially telling them, if you do this, we will too. How's the EU
makes sense.
responded to this?
Wasn't a A+ setup, so I wasn't trying to take it on the account. But we the last one before it went down. We pushed, got a retest, and flushed.
The Europeans need to pose themselves a lot of difficult questions. I think what the Europeans would like is for the United States to go at this alone and not really have to get involved. But they need to ask themselves, are they really willing to torch their relationships with China, with India, who they're trying to vaguely retain in a sort of Western
there's a 5 minute.
just because Donald Trump has put this sort of on the table. Maybe they would if they could rely on Donald Trump. But at the end of the day, they have very little faith that there's going to be necessarily follow through from the United States. And are they going to charge head first into a tariff war with China and India, only to be sort of stood up potentially, or whenever the sort of interests of the United States shifts? But listen, it's a very interesting dilemma for the Europeans to be put in. They need to find another way to put pressure on Russia in order to end this war.
Bar.
Maybe this begins a conversation, though I do not see them, putting in 100% tariffs on China or India. It's just not how the EU works.
Ollie, appreciate the latest. Ollie, live with the latest from Berlin in Germany. Anne-Marie, the Treasury Secretary, sat around this table only a few weeks ago and made this exact point.
He said that he was at the G7 meeting. He brought up the fact that maybe Europe needs to start getting on board, tightening the screws when it comes to China, India, secondary tariffs or sanctions. He said at that point, everyone decided to look what kind of shoes they were wearing, aka everyone got silent because the Europeans don't want to do it.
Let's see what their response is in the coming days. From the view on Wall Street, Peter Chief of Economy Security, going to see you on the table. Good morning. Good morning. It's the great European contradiction. They want the warm blanket of American security, and they want to maintain an economic partnership with a country like China. Is that becoming unsustainable now?
I think even let's take a step back. Let's revisit the sanctions that have always kind of been loosely enforced, not really enforced. Europe has continued to buy Russian, energy products this entire time. So the starting point, I think, how about we really crack down on the sanctions in place, make sure that's happening, and then maybe push on the secondary tariffs. I think that would be a good outcome for this, is the real commitment to actually enforce the sanctions on the book and move that direction. I think you can put pressure on Russia that way, and it's going to be harder for countries to swallow than actually enforcing the sanctions if we do.
When you say enforce the sanctions, you mean the United States or the European Union?
Primarily the European Union, right? They have continued to buy Russian products. They've looked, I think, the other way when they buy it from Kazakhstan, knowing that it was probably shipped from Russia to Kazakhstan. So I think really enforcing, isolating Russia as much as possible, where their only counterparties really are China and India, would be a good first step. Can China and India support them? And if there's a talk of secondary tariffs, maybe that slows down China and India's interest in dealing with Russia, puts the squeeze on them. Maybe Xi follows Putin. And so I think, our view is that unless we really do something, to stick to Putin, he's not coming to the table. He's fine with the war. He thinks they're winning. And clear with the, incursion of Poland. He's a little bit, carefree and is going to push the envelope.
Do you think it was deliberate what we saw overnight?
It's hard to say, but I think it's definitely an indication that he is nowhere close to coming to the table and doing some sort of ceasefire. He believes he's winning. Every step he is taking is to push the West and set up better, boundary lines in Ukraine, so if and when there is a deal, he can claim more land.
It wasn't just this. We also saw overnight Israel attacking a site in Doha to attack Hamas leaders. This comes at the time as we were getting downward revisions to jobs. It felt like a dumpster fire. Stocks reached record highs. Can you explain that?
I think stocks have been very conditioned, like rate cuts equals higher stocks. So I think that's a little bit of the mode we're in. I have to admit, I don't follow Oracle as a company, but their earnings, their projection was really good. So you're seeing that. So I think so long as we continue to spend on the AI, and I do think we are seeing this kind of what we've been calling national production for national security, whether it's investments in Intel, MP. I think you're going to see more and more.
This price action is trash, dude.
Reduce the things that we need for national security. I think that's a positive.
Okay. There are positive stories here, but are we conditioned to just ignore?
I had this before, but look.
First headline, then calm down. Are we just conditioned to shrug it off and say,
5, 10, 15, 20, 25, 30, 35,
yeah, I think that's a big part of it. So I think this will kind of, again, we've had enough success, right? Where, we push back on being pull back.
Alright, guys. Thanks for tuning in. This was an amazing trade today. Wrap up the count with $500. Holler at your boy later.
So I don't think we spend enough time looking at the data.